Welcome back to my channel. So today's topic or this video's topic is weekly candle formation, and the strategy is called Thank God It Is Friday. That's the strategy, TGIF. Thank God It Is Friday. Now, it's a very straightforward strategy, but before I continue, I want to give a shout out to my coach. I always give a shout out to him because you hardly see someone that invests so much time in their students, and he did a wonderful job on me. So I always give a shout out to him. Now, I'm going to start with the first one based on how he taught me. On a training week, either bullish or bearish week, we expect to see market retrace back 20 to 30% of the weekly candle on a Friday. Retracement might start from 9 a.m. till 2 p.m. New York time. On your chart here, right? On your chart, if you look down, can you look at my right hand side? Can you see where my cursor is? This is my cursor. Now I'm going down, down, and here. I tap on it, and what do I take? I take New York time -4, and automatically my chart is New York time. So I followed the last rule. I'm coming back to the first one. Don't forget to subscribe to my channel and ask your questions, please. Now, what do I have here? I have information of how a candle is being created. I have here for a bullish candle, price starts below, price opens here, then price goes creating the low of the week, price creates the high of the week, and price finally comes down and close for a bullish candle. And for a bearish candle, the vice versa, but it's different about a sell candle is price opens above and closes below. Can you see it's creating the high above and the low below, but closes below price? Now, we all know I'm going to start like a form of a top down analysis, but it's not really a full top analysis, but just a form to know where price is going to. Now, I have a 1 month chart here. In a 1 month chart, I have two structural break here. I have a break of structure here, taking out external range liquidity, and I have what here again? I have another worship break of structure here, taking out another external range liquidity. So what do I go for? I have a break order block here, which I know that price is at a bullish order block, but it's just on 1 month. If I come down to 1 week, right? On 1 week, now I want to show you something. I know that price is at the order block for my 1 month, but on 1 week, this is 1 week candle, right? If I put a line up here, can you see it? Let me expand. Sorry, I will go back to that. And I put a line up here. This is just 1 week candle. Can you see? This whole candle, this only one candle is just 1 week candle, right? Now, if I go to daily, I need 5 candle to create a 1 week candle. Now, if I look at this candle here, what did price do? Monday, it came down, created the low of the week. Tuesday, Wednesday, Thursday, Friday. Now, if I look at this candle, right, normally price would have gone higher very well here before it now come down and close here. Let me go back to the diagram. Like example now, let's assume price is buying here. Before price will close, price will first do like this first. It will go with a full bullish momentum. Before Friday comes, it will now go low to finally close price. But it has created the high and the low are still valid. But this body is where the price is. The body is the price. The body, opening of the price, closing of the price. Opening, selling, sorry, for sell, opening of the price is above, closing of the price is below. For a buy, opening of the price they're buying from here, and price was still buying, 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 buying. But when Friday came, price said, oh, market's about to close, let me rest. It just come down. That's what happened here in the scenario around here. Now, when this rule gave another rule again, the thing said on a trending week, either bullish or bearish, we're expected to see the price retrace back to 20 or 30% of the weekly candle range on a Friday. Assumption, price moves up here. What will you do? A Fibonacci from this low to this high. So when price has done its full movement, let me expand so you can see it very well. I'm expecting price to take my sell from this high to 50% here. I can come down to as low as what, 1 hour, and look for a shift of market structure depending on when I'm still on Friday. But some individuals like to go as low as 15 minutes. and they will take their trade here. There's a shift in market structure here, trying to find a suitable entry for their entry just for Friday. And they will take the sell. Some people can take the sell at this fair value gap. You can see it here. Price what happened? Break of structure. And what happened here? A shift in market structure. Now, this is what we call OF IOFED, institutional order flow, IOFED, where a wick align with a fair value gap, and some individuals will just aim for 20 or 30 pips, and they will use this swing point for entry. It depends on how they want to enter it, but some individuals look for their entry either on 1 hour or on 15 minutes. But this strategy is only used based only on Fridays. Only on Fridays. Let me delete this one now. Give another example. Thank you. I'm trying to find another example for you. The strategy works mainly on Fridays. Mainly on Fridays. Good. I want to close this one here. And this is another week. What do we have here? Another what? Another high. Another what? Another low. Right? What do I have? This is the highest point of the week. I can come down to what? For Friday. This is on Friday. What happened on Friday? This Friday. But don't forget something I'm forgetting to take note of in the instruction. It said from 9 a.m. to 2 p.m. New York time. I'll come to that Friday and I'll look for 9 a.m. New York time. Where is 9 a.m. New York time? To 2 p.m. New York time. Where is it? Follow my hand. The timing is here. And what will I do? I can go as low as 15 minutes. Price is not expected to go up. It's not every day you expect to take profit, right? Look for another candle. I'll delete this again. I'm just trying to give you a lot of examples so you can see how it works. Thank God it's Friday, right? This was a new week. High here to this low here, right? Right? I come down to my 1 hour. The instruction says what? 9 o'clock to what? 9 o'clock New York time to 2 p.m. And what are you looking for? You're looking for a scenario where we are going to have a change of character for your entry. What am I seeing here on 1 week? On 1 week, what was I expecting price to do? Price was selling down. So we're going to take this change of character from here going back up 50%. But if you look at the whole 2 weeks, we did not get a strategy for the thank God it's Friday. Instead, it activated what on a Thursday. I'm going back to Friday, 9 a.m. And this is what happened on 9 a.m. around here. Let's see. Let's see. Just try to make sure that it doesn't fall. As long as the time has gone, there was a shift in market structure here. There's a shift in market structure here, but this came on a what? On a Sunday. For this second week too, we do not have trade. But the instruction just gave us what? It gave us the rules and regulation here that retracement might start between 9 a.m. to 2 p.m. New York time. And these 2 weeks I use an example, there was no trade, but this particular previous week there was trade. But it's just a strategy for you to just have an idea of how it works. So you're going to be trading the retracement that takes place for price to close for the weekly candle. That's what Thank God It's Friday strategy is all about. Thank you so much. Welcome back.